A great question to ask ourselves today: where is all the money going? One of the largest vacuums of liquid capital is taking place right now today. Investors all over the world are trying to determine what asset class seems to have the greatest stability and the greatest legs to run forward with the highest internal rate of return. So the question might be, is it commercial real estate? No. Would it be oil and gas asset and investing? No. Would it be multifamily? No. Would it be any normal traditional asset class as we know it over the last 15 to 18 years since the 2008 financial crisis? I would say the answer is no. When I think about and I talk to millionaires all day long, what I'm hearing is the amount of the ante to play today's poker game is much, much higher than it's ever been because stock prices are higher. There's more stocks to choose from. There are certain stocks that are leading the Dow, and there are certain stocks that when they go down, cause the Dow to retract quite substantially. We are in a pinnacle environment of investing where maybe the top 7 to 15 stocks on the Dow are controlling 60+% of the Dow's movement. That's a precarious position to be in. It's like trying to catch a falling knife. Where do I know and how comfortable am I to make an investment decision in public stocks when they're moving so radically based on very finite surgical moves by certain specific stocks? Now, here's the question. Money doesn't just get printed, which it does technically from the Fed, but let's just assume without printing money, money moves from this asset class into another asset class. If you introduce a new asset class to the mix, some money comes out of maybe all the other asset classes into the new asset class, or at least some kind of proportion. When you think about SpaceX, you think about NVIDIA, you think about all these AI data centers, you think about all the new AI software, Anthropic, you think about we're talking hundreds of billions, if not trillions of dollars have been created over the last 15 to 18 years. That money has been coming out of other traditional assets. Now, obviously, organically, those assets have grown over time. So maybe $1 trillion turned into $4, $5, $6 trillion, and everybody's super excited and very happy with this change or rotation in new asset classes and newfound wealth. But then you're going to have some losers out there. Is it real exciting to go buy a 6 cap rate office building? Is it interesting to buy a 9 or 10 cap rate apartment complex? Is it interesting to go buy yourself a very boring and stale self-storage unit? Probably not. Do you want to go out and buy another 40 rent houses that are going to have tenants and issues and higher insurance and higher costs and more electricity and more terms in favor of the renter instead of the landlord? Maybe not. Is it better just to say, let me sell those assets, not enter those assets, not participate any further? Let me take my money and do the easy thing. Let me find which stocks are moving, which ETF makes sense, create less headache, more liquidity, and just play the game like everybody else, knowing that I'm so smart, I can get out if it ever turns south or goes backwards as far as the market in total. The idea for us, though, is it's a changing world. Artificial intelligence, data centers, all the different things going into the software and the driving of artificial intelligence is creating this entire multi-trillion-dollar industry, which is so much larger than the entire stock market was even 18 years ago, the 2008 crash. So it's a balloon, and it's getting bigger and bigger and bigger. The question is, does it ever pop? Does it ever take a recoil and come backwards because too much money, too much confidence, too much growth occurred, and yet all these other asset classes are the ones that are being void of new capital and continuation of capital investment? It might beg to say, are you a contrarian? Do you FOMO and follow all the other different assets that are moving today? Or do you say, because everyone is moving that direction, that leaves a huge opening in things like commercial real estate, distressed assets, looking at things that other people are completely avoiding because it's no longer the hottest ticket or the favorite item? Well, I know what billionaires do. Billionaires are smart. They'll put a little bit in this, a little bit in that. They keep a very clean plate. They're very specific on what they want. And they also play the long game, which most investors do not. I truly believe the billionaires were getting out of the stock market 12 months ago. There are some that make all their money in the stock market, so that's what they're going to do. But then you get down to the less than $1 billion net worth, and you say, well, what do the $100 million plus net worth players do? Well, they have a little bit tighter bandwidth. And maybe they're saying, I'll take 5 or 10 million and I'll play the new technology game. But I still like real estate. I still like oil and gas. I still like hard assets. That's the foundation of what I own. Maybe I should be looking at what's happening and where the vacuum is going. All I know is that every time there's a vacuum of capital in my 40-year career, that vacuum ends up being where everybody ends up tripping and falling. The vacuum is so much money, too quick, too soon, too robust, out of sync, and not financially measured, the FOMO of the new world. And that FOMO usually results in quite a bit of a correction at some point in time. Today's a great day to ask yourself, if you can't see it, touch it, kick it, or feel it, is that really the best investment for you? If you can't draw it with a crayon, like famous Peter Lynch said back with Fidelity Investments in the 80s, if you can't draw it with a crayon, maybe you should stay out of it. Don't get me wrong. We probably have 1,000 new millionaires being born every day. But I've seen when the market corrects, and I've seen the backlash when it does. And that same 1,000 millionaires that are born today will be broke tomorrow, and they'll own new houses they can't afford, new cars they can't afford, trips they can't afford to take, and an ego as well as no depth to their newfound net worth. And how many of the 22 million millionaires in this country will be affected if there's ever a true correction, which we have not seen in 17 years? I don't know. I don't like being negative. I don't like predicting when we're going to fall off the cliff. But in my view, in my background, I fully believe we're going to see a major correction sometime in the last 60 days of this year. It's going to come post-midterm election. And I think the cards are going to fall very hard where they belong, and that's called a reality check. Let's just hope that you're smart enough to avoid that fall by protecting, by being diversified, and being truthful to the numbers, truthful to the analysis, and make sure you're not caught up in that windmill that's taking place right now called the AI revolution. Thanks for listening.